Hello students, today we are going to solve one more sum on cash flow from operating activity. In the previous video also we did one sum. Likewise, we are doing one more sum on operating activity. Again, the question which we are solving now in this video, I have already uploaded a link below this video. Just click on that link. You will be able to download that PDF file. Take a printout, sit with the question paper so that you can understand what I am solving here. Let's continue. Now, question says calculate calculate operating profit before working capital changes from the following info. But we are going to solve entire operating activity. Okay. Now, you can see in the question they have given us a balance sheet. Below it they have given note to account. We are going to start with the operating activity, and you know students, your operating activity starts from net profit before tax, and this you will get with the help of working note. You have to make working note like this, and your working note will start with the closing surplus, opening surplus. Now you know very well students where this surplus will be given to you under a heading reserves and surplus. So you check in the balance sheet, they have given reserves and surplus, and they have given a reference of note number 2. So go down below the balance sheet, you will see note to account number 2 given to you, and there you will find 3 items are given under reserves and surplus: general reserve, investment fluctuation reserve, and surplus. Here we are concerned now with the surplus amount. Check for the current year, they have given 2,75,000 for the current year. This will be your closing surplus. What was your opening surplus in the previous year? It was 125. Let's take a note of this in our working note. So your closing surplus is 2,75,000 and your opening surplus is 1,25,000. Now you subtract this. You will get profit for the year, 275 minus 125. So your profit for the year is 1,50,000. This is profit for the year. Now what to add in this? There are 4 items to add: proposed dividend, interim dividend, PFT, provision for tax, and transfer to general reserve. So you are going to add these 4 items. Let's find one by one. Where is given these 4 items? First we look for proposed dividend. Now this will be given inside the balance sheet under the heading current liability. Check under the heading current liability. They have given short-term provision with note number 5. So go down in note to account, refer to point number 5. Under point 5 they have given both the items, provision for the tax and proposed dividend. We are concerned here with proposed dividend. Check for the amount proposed dividend. They have given proposed dividend for the current year 120, which we are going to ignore. Why? Current year proposed dividend is still under approval. It is not approved by the shareholders till date. So we are ignoring it. We will consider previous year's proposed dividend, which is 60,000. So I am going to write previous year ka amount 60,000. Current year ka proposed dividend you will ignore. Now interim dividend, this always will be given as a additional info. In this question they haven't given us a additional information. So interim dividend is not there. Put dash. Then provision for taxation. Which amount to consider? Current year. What about previous year provision for tax? You are going to pay this year. You will take it as tax paid. So here we are checking now provision for tax, which is again in same note to account number 5. Provision for tax. Current year ka they have given 2,50,000. So we are going to take a note of this. 2,50,000 is your current year ka provision for tax. Previous year ka you will pay this year. You will take it as tax paid at the end of operating activity. Now, what is next? Transfer to general reserve. Let's check any reserves are there. Yes, it is there. Reserves will be always given under the heading reserves and surplus. They have given us note number 2. Go down note to account, refer to point number 2. They have given reserves and surplus with the 3 items. First item is general reserve. So general reserve closing is 1,50,000 minus opening general reserve is 1 lakh. So you always take a difference amount. What is your difference amount? 50,000. So your difference amount is 50,000. What it shows that this year you transferred to general reserve 50,000. Last year you had a general reserve 1 lakh. This year you transferred 50. So your closing balance is 150. Now one more reserve is given, students. Check number 2, second item under reserves and surplus. IFR, investment fluctuation reserve. In this also there is a transfer given. Transfer to IFR, investment fluctuation reserve. Closing balance is 90,000 minus opening balance is 50,000. So transferred amount is 40,000. Done. So we are done with the working, and when you add you will get net profit before tax. Let's just add it. 1,000, 90, 140, 140 and 62 lakh, 350, 550. It's 550. So your net profit before tax is 5,50,000. Now what to add, students, in this? Non-cash and non-operating expenses. You know, students, what comes under this now? What comes under this? Depreciation, amortization, and loss on sale of assets. Since there is no adjustment given, there is no loss on sale. So let's find for amortization and depreciation amount. Okay. So now depreciation is always charged on fixed assets. So check inside the balance sheet. Under fixed asset, under non-current asset, you will find fixed asset. They have given 15 lakh for current year, and previous year it was 11 lakh. There is an increase in your fixed asset. So if there is an increase in your fixed asset, you will consider this increase. Why there is an increase in your fixed asset? You will consider it as purchase. You're purchasing fixed asset. That's the reason the value is increasing. And purchase of fixed asset, you know, students, where it comes. It comes under investing activity. What we are doing here? Operating activity. So it won't come under operating activity. It will go under investing activity, not here under operating activity. So we are ignoring this. Now one more fixed asset is given to you. Non-current investment. It is same. Previous year 5 lakh, this year 5 lakh. So there is no depreciation in this sum. And even there is no amortization. Intangible assets are not there. So question of amortization doesn't arise. So that's it. So there is no non-cash, non-operating expenses. Less non-operating income. Let's check once whether there is a non-operating income given. No, even this is not there. So your answer will be same, 5,50,000. What to write? Operating profit before working capital changes. Now what to write next? Next heading is increase in current liability and decrease in current asset. So let's find which current liability is increasing. So go to balance sheet, check into current liability. They have given trade payable, and for trade payable they have given us note number 3. So go down, students, check in note to account number 3. What they have given for trade payable? 2 items. Creditors, bills payable. Let's check one by one. For creditors first, let's check whether it's increasing or decreasing. Last year your creditors were 70 and this year it is 80. So your creditors are increasing. If your creditors are increasing, it's increase in current liabilities. So you will write it here. Creditors. How much it is increasing by? 70. Last year it was 70. This year it is 80. So it is increasing by 10,000. Let's check with the bills payable. Last year it was 40. This year 60. Again this is increasing. So even bills payable will be recorded here. Increase in bills payable, increase in current liability. Last year 40. This year 60. There is an increase of 20,000. So done with the current liability. Go back into the balance sheet. See under the current liability, trade payables we have already done. Other current liability, again they have given us note number 4. Students, go down to note to account, check note number 4. What is given under note number 4? Outstanding expenses, check the amounts. Last year it was 20, this year it is 10,000. So it is decreasing. Decrease in current liability will go under next heading. Decrease in current liability and increase in current asset. So outstanding expenses will go under this heading. Outstanding expenses. Last year 20, this year 10. So there is a decrease by 10,000. Write in bracket. Then check again. Go into the balance sheet. See under the current liability, third item is short-term provision. Again, they have given note number 5. Go down to note number 5, note to account note number 5. There you will see proposed dividend, provision for tax, which we have already considered for the calculation of NPBT. So now we are done with the current liability. Check in the balance sheet. Go on the asset side. See under the current asset, they have given to us the amounts directly to you. There are no elements given. Directly current asset ka 2 amounts are given. Last year it was 265. This year it is 235. So your current asset is decreasing. Where to write decrease in current asset? Here in this heading. So current assets. They have not given us a breakup of this. So write it as this only. So last year your current asset was 2,65,000 minus. This year your current asset is 2,35,000. So see how much you are getting a difference. 0, 3, 0. So 30,000 is your difference in the current asset. Anything else to be considered, students? No, we are done with the current asset and current liability. Now total of this will be 60,000. Add this, you will get 610 negative 10,000. You will get answer 6 lakh. What to write, students? For this answer you will write cash generated from operation. What comes next, students? Next comes tax paid. What you will take for this tax paid? You will go back to your short-term provision, note to account number 5. There you will see provision for tax given for the previous year, for the current year. Current year ka provision for tax you have taken here for the calculation of NPBT. Last year ka provision for tax you will take it here as tax paid. So last year ka provision for tax is 2 lakh rupees. So if you minus, your answer is 4 lakh. It's a positive answer. So what to write? Cash inflow from operating activities. So this is how, students, you will solve operating activity if it is given in the question. Remember, this is 4 marker sum. 4 marker, or it may come for 6 marker. Do practice this kind of sum from the textbook. Thank you, students.